Hi everybody and welcome back to the channel. So it has been a while since the last update. Life got a little bit busy, but I'm going to be back and I'm going to try to upload a little bit more frequently for 2026. So this video is just about my performance in 2025. So in the TFSA, we're up to 63,550, which is an overall total return of 21.38% over the past year. If we just go by value, which isn't too bad. The TSX definitely outperformed the portfolio, but you know, that typically doesn't return 25% in a single year. So very surprising outperformance by the TSX. But I did outperform the S&P 500, which only returned about 11% over the past year. So not too bad overall. I'll take it, especially since my portfolio is a mix of both Canadian and US stocks. So I, of course, have to expect my return to kind of be around what the American, what the Canadian markets do in any given year. So just looking at the holdings, one stock I did start a position in 2025 was AMD, and that was a fantastic investment. So we're up over 109% on the position. And the reason that I picked it over NVIDIA, which also had a decent year but didn't quite match the returns of AMD, and I think that that's going to continue going into the future because I see a lot of the large hyperscalers are trying to replace NVIDIA with not only their own in-house chips, but also AMD kind of giving an alternative to the NVIDIA GPUs is kind of benefiting the customers that are trying to buy graphics cards because, you know, if you're getting everything from one supplier, you're kind of at their mercy and you have to pay whatever price they charge. That's why NVIDIA has such high margins. And again, when you have nearly the entire market share to yourself, you know, other companies are paying attention and they're going to try to get that market share and that margin away from you. There's nowhere for NVIDIA's market share to go but down, in my opinion, because you can't go from 100%, you can't gain any more. There's only market share to lose at that point. And AMD does have some really compelling products in the data center, and especially for AI. So that's why I'm really bullish on AMD, and I think that this is just going to continue to do very well for many years to come. That's why I'm not interested in selling a single share. Amazon had an okay year, so up 37%, and this is about 10% holding in my portfolio. I really do think Amazon is going to have a decent 2026 as well, so I'll continue to hold this and not in a hurry to sell it just because investors are not liking Amazon at all because they're not returning any capital to shareholders. I like to think of Amazon as the world's largest startup where they can reinvest all of their profits back into the business to get higher rates of return, and that's evident from their increasing operating cash flow, and they are trading at historically low price to operating cash flow. So I do think that once the sentiment changes on Amazon, it could kind of have a Google-like massive win for this year. So I don't know if that'll happen this year, but if that does happen, that sentiment shift, and as the price goes up, the sentiment will increase accordingly. Another great investment for 2025 was ASML, so it's up 60%, easily beating the market on both the TSX and the S&P 500. And the reason I bought it was because it really had a mispricing from the market due to just some, temporary issues in my mind, just some uncertainty about the Chinese market. But again, all this AI demand needs more chips, and ASML is the only supplier of the advanced machines that make all the chips. So regardless of, if NVIDIA makes the best chip or AMD or Broadcom or Amazon or Google, doesn't matter. They need ASML machines to make these chips. So they're going to win in this AI race over the next, 5-10 years. It could be longer. Regardless of who comes out on top, ASML is going to be victorious. That's why it's a great investment. We had Brookfield not being incredible in 2025, but I do think that, for a long-term hold, it has had quite a run up for both BAM and BN, so not too bad at all. I also started a position in CNQ, and it is up 8%, so not too bad there. I'm really just getting this for the income And I think getting, these commodity stocks, while whatever commodity is you're trying to buy is somewhat out of favor by the market or just not really doing much, because oil didn't really have a great 2025. So I'll continue buying and holding this one for the long term. Just very well managed and diversified company. Even if oil prices fall, they can still be very profitable in the 40s. It's currently around 56, so they have a lot of profit that they're making, and they can continue returning to shareholders. And I also kind of reinitiated a position in EQB. So I did actually sell out of this earlier in 2025, but since they did announce the acquisition of PC Financial, I think it's actually quite an interesting stock to get into. And the acquisition is expected to close sometime in 2026. So now I think is a very interesting time to acquire shares of EQB, since they've been underperforming recently, not doing very well. Their CEO died, then they had a new CEO come in. So there's a little bit of uncertainty with the management team, but I think them getting PC Financial at a very reasonable price to book of 1.15 is honestly very interesting for this bank, and they do gain access to the PC Financial MasterCard, so it's kind of like their first credit card. So this is a great way to get a lot of new customers at a very fair price, and we'll see if the management can kind of right the ship. But honestly, this acquisition is just very, very good. I'm very, very excited to see what happens once they actually close the deal and how that'll reflect in the financials. Once we kind of see that, then the market might, reprice the stock, and it'll go back up again. And then another thing that I did start a position in Go Easy in 2025. So they're essentially a private lender. So they do personal loans, they do mortgages, they do auto loans, but they're going to be at higher interest rates to people that cannot get approved for loans at the big banks. This can kind of help people build their credit to a point where they can qualify for lower interest rate loans. So I know that some people might be a little apprehensive to predatory lending, as it were, but they kind of, fill a need that people have. Not everybody has good credit or the best credit, and they still need, auto loans or, personal loans for their business or whatever. And Go Easy is there to fill that need, and they are quite profitable. And I also did initiate the position because they're trading at a very historically low valuation. They're trading at about 6 times earnings, and at their peak, they're at roughly 10 times earnings. So there is a lot of upside potential in the stock. So we'll see what happens with that. And also their starting dividend yield is quite high historically right now. So also very interesting. And they are dividend growth stock, so they have a very high dividend CAGR. So they increase the dividend a lot over time. So even if this one doesn't really rebound, it's a nice income stock with a lot of upside potential in the price, in my opinion. So that's why I was interested in starting this position. And then we have HIMS, which was all the way up in the 70s the last year. Unfortunately, I did not trim anything from my position, so a little bit of a misstep from myself there, but overall it's still doing really well, and it is entering the Canadian market in 2026, and they've already recently done an acquisition to follow along with their previous acquisition of a European company, Zava. So they're expanding into different markets. And this is a healthcare platform, and I think they have a lot of growth potential left, and the market is kind of pricing them as this, compounder that just does GLPs for weight loss, but I think they're a whole lot more than that. And if you look at, the network effect and the type of subscribers that they have, it's a sticky subscriber base, and as the customer base ages, they're going to need more and more medicine, which means, more revenue per user for HIMS, which is great. So very, very interested in how this will do in the next year. The market does kind of need to see a little bit of reacceleration in the growth rate, but I don't think the valuation is too ridiculous. So it's definitely interesting. And if it does run up, to the levels that it was before, I might just trim the position a little bit just to get the portfolio sizing, a little smaller, just because it was about 12% of the portfolio. I don't want things to really go above 10. For the most part, especially for something so volatile such as this. Then I also started a position in MasterCard. So that has been, just starting the position. So I think that this one is trading at, not necessarily the biggest bargain, but I do notice that it is trading closer in valuation to Visa, despite this having a higher growth rate, and more of their revenue is split between value-added services such as, fraud detection, cybersecurity for financial clients that they have. So their business model is not as, focused on the, the debit cards and the credit cards, which is more Visa. Visa also has value-added services, but not to the extent of MasterCard. And MasterCard does have more growth in Europe. So I like both companies. It's just MasterCard is trading close enough to Visa to where, I kind of want to own both. I can't choose just one. I think they're both awesome. So either way, but I am going with this one just because I did buy my Visa at a much lower price, and because the valuation and the PE of MasterCard has fallen to not that large of a premium over Visa. I think it's very interesting right now. And of course, VDY did excellent in the previous year because the TSX did so good, up 27% for me overall, reaching all-time highs, paying a high monthly dividend. So I love it. I don't need to have a bunch of Canadian bank stocks, life insurance companies in my portfolio. They're just all in here. It's got a bit of energy too. So a very nice way to keep my portfolio concentrated, and, not needing to have like 10 extra stocks because they're kind of all in here. And then if I want a little bit more CNQ, I just buy some extra shares of it. And then the other stocks can just be things that are not in VDY. So that's pretty much it for the portfolio update. And now I'll get into the income that I made in 2025. For 2025, I received $2,486.28 in dividends for 2025. So we've definitely come a long way since the portfolio started in 2021, where I only received $261. So almost a 10x increase in about 5 years of investing. And for the next year, I definitely want to get this above 3,000 if I can. So I currently generate $27.8396 in dividends a year. Monthly, that's about $232 a month in dividend income. So for 2026, I kind of have a goal of hitting $250 a month in dividend income. And to do that, I just need to get another about $217 in dividends for the year. So that shouldn't be too difficult to do. And that's what I'm going to be trying for the year. So let me know in the comments down below how your portfolio did in 2025 and what your investing goals are for 2025. All right, have a good day, everybody, and I'll see you next time.